We can't trust the US dollar fiat system. We have to find another way. And really the only way that I think the world can continue is to find some sort of a neutral reserve asset. We have to go back to this neutral reserve asset like gold was. So under the Bretton Woods Agreement in 1944, the world agreed to have a gold standard, the gold being this neutral reserve asset. And so the world needs this neutral reserve asset. And of course, Bitcoin is this asset that can fit that bill. So when you overlay the technical chart, the technological revolution chart, the S-curve, the 4 phases, the geopolitical picture, I think by about 2050 to 2060, I think Bitcoin becomes the unit of account. That unit of account. So then what happens when we take the $8.6 quadrillion basket and reprice it in Bitcoin? 8.6 quadrillion divided by 21 million Bitcoin. I think that's like $400 or $500 million Bitcoin.
Mark Moss says history repeats through patterns, and Bitcoin is following an S-curve everyone knows. Slow adoption, a rapid mid-phase, then mass acceptance. He argues Bitcoin and AI are both in that rapid growth middle. If the curve keeps its shape, Bitcoin could reach global scale adoption by 2050. Moss frames this as a monetary evolution, not just technology. Money starts as collectible value, shells, gold, then becomes a store of value, and finally a unit of account when trust and utility scale. Bitcoin begins as a niche digital collectible, graduates into a widely accepted store of value, and could become the global unit of account once the network and infrastructure reach critical mass. That shift would be seismic. Moss points to the total global financial wealth, roughly $8.60 quadrillion. With Bitcoin capped at 21 million coins, simple division produces theoretical outcomes that grab attention, $400 to $500 million per coin. He stresses the arithmetic isn't a price target but a framework. If Bitcoin genuinely captures a comparable share of global monetary value, those numbers follow. More important, Moss says, is the mechanism. An S-curve implies momentum. Adoption begets infrastructure, which begets liquidity, which attracts more users. Institutions, sovereigns, and ordinary savers compound those effects. For him, the question isn't whether Bitcoin will matter, it's how quickly the rest of the world chooses to price its assets in it. He expects the acceleration to be messy. Political pushback, regulatory fights, and volatility will accompany adoption, but none of that derails the trajectory. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
I think by 2060, I think what happens, so I do a lot of work on cycles. And so we can look at all 4-year and 8-year and 40-year and 50-year, 200-year cycles. And we have these technological revolutions that happen every 50 years. And so we're on the 6th one right now. Mm-hmm. And what happens is when something happens 2 times or 3 times or 4 times, it's more likely to happen the 5th time, the 6th time. So now we're on the 6th time, and they have this very dependable framework or this blueprint that they follow. And so Bitcoin falls into this technological revolution cycle, Bitcoin and AI together. And there's 4 distinct phases that it goes through in this. And so we can look at like an S-curve to see the diffusion of innovation within that cycle. And so we're in this parabolic part of the S-curve, but we can start to look at where it starts to get full-scale adoption, and that should be somewhere around 2050. And we can look at also there's the evolution of money. So for thousands of years, money has evolved. So typically it starts as a collectible. So it's like a feather, a rock, a seashell. And that collectible then becomes a store of value if enough people believe in it. So a lot of wealthy people store their value in collectible cars and art and things like that. But only if it has the right attributes, it could become a money. If it's portable, durable, divisible, recognizable, fungible, it could become a form of money. And then if enough people use it, it becomes a store value or a unit of account. So that's the final phase. So we overlay this into this 50-year chart with the S-curve and this 4-phase process. And I believe Bitcoin could become the unit of account of the world by 2050. And there's other reasons we can look at this, but from a geopolitical lens, we can understand that, the dollar has been losing its value, 99% of value in the last 110 years. And the world has been trying to de-dollarize for a long time. And really what really pushed the world over the edge was when sort of the US and NATO decided to seize Russia's bank accounts when they invaded Ukraine a couple years ago. So there's 3 superpowers in the world with nuclear weapons, Russia being one of them, and they had their money seized. So every nation in the world was basically put on notice like, if it can happen to them, you stand no chance. And so you hear about the BRICS nations trying to start their own currency. You hear about China working with the BIS to create their own CBDC with this project Bridge. And everyone's trying to figure out this solution to get out of the dollar. And now we have this tariff war going on kind of a thing. And so all these nations are trying to figure out, how do we work in this new world where we can't really trust each other? We can't trust the US dollar fiat system. We have to find another way. And really the only way that I think the world can continue is to find some sort of a neutral reserve asset. We have to go back to this neutral reserve asset like gold was. So under the Bretton Woods Agreement in 1944, the world agreed to have a gold standard, the gold being this neutral reserve asset. And so the world needs this neutral reserve asset. And of course, Bitcoin is this asset that can fit that bill. So when you overlay the technical chart, the technological revolution chart, the S curve, the 4 phases, the geopolitical picture, I think by about 2050 to 2060, I think Bitcoin becomes the unit of account. Now, what does that mean? What it means is that store value basket I was just telling you about, that's now $8.5 quadrillion. It's not $8.5 quadrillion anymore. Now it's priced in Bitcoin. That's what that means, because it's the unit of account. You see, right now we measure most things around the world in dollars. Obviously, right now we're recording in Hong Kong, so they have their own currency here. But globally around the world with the petrodollar system, the dollar is sort of this globally recognized unit of account. But I believe Bitcoin becomes that unit of account. So then what happens when we take the $8.6 quadrillion basket and reprice it in Bitcoin? 8.6 quadrillion divided by 21 million Bitcoin. I think that's like $400 or $500 million Bitcoin. And I know that sounds crazy, but Bitcoin is programmatically designed to go up forever. And the reason why it's designed to go up forever is because we don't want money. The wealth is the goods and services. And what happens is, if I had a business, well, I do have a business. Let's say I have $1 million business and you invest $100,000 and you now get 10% of my business. And I turn that business from a $1 million business to a $10 million business. And now your share in my business went up in value, unless I diluted you, unless I created more shares, right? And so that's what happens. Basically, your $1 equals a percentage of the wealth in the world. But every time the governments print more dollars, you get diluted in your share of wealth of the world. But when you have Bitcoin, you can't get diluted. So if I have 1 Bitcoin, I own 1/21 millionth of all the wealth in the world. Now, we can't be diluted in that. And so what happens is the wealth of the world always continues going up because we invent new things and we solve new problems and we create new things. And so as that wealth of the world continues to go up forever, I never get diluted. So my share of the wealth in the world goes up in value or purchasing power forever.
Mark Moss says the system is built on constant spending. Governments and central banks depend on it. When people start saving instead of consuming, the economy slows and policymakers panic. That's exactly what happened during COVID. As spending collapsed, governments flooded the system with trillions of new dollars to keep money moving. The message was clear: don't save, spend. Moss explains that this obsession with spending is rooted in inflation. When your money loses value every year, it's rational to spend it fast. Holding cash becomes a bad bet. Bitcoin flips that logic on its head. Its supply is fixed, so as demand grows, each coin becomes more valuable. That turns saving into a winning strategy and rewires how people think about time. Instead of chasing short-term pleasure, you start thinking in years, even decades. Moss says that's the real revolution behind Bitcoin. It changes behavior. When people realize 1 Bitcoin worth $15,000 today could be worth $1 million in 5 years, every purchase suddenly feels expensive. You start asking if that new car or vacation is really worth what you're giving up later. In a world addicted to spending, Bitcoin rewards patience and restores the lost habit of saving. Let's get back to the interview.
Well, Bitcoin changes your life for a bunch of reasons, but I think ultimately it starts to shift your entire mindset to what we call let's just call a long-term time preference, right? A low time preference. And so what happens is when you start to realize that the fiat system is meant to turn us into consumers, consume. One of the reasons why they have inflation is they want people to spend money. The government thinks they have to stimulate people to spend money. The reality is people should be stimulated to save. They don't need to stimulate people to buy, but they want to stimulate the economy. You talked about the velocity, I think earlier, about the money. And so like during the COVID pandemic, everybody started hunkering down and saving money. That was terrible. So they injected trillions of dollars of stimulus to get people to start spending again. So humans just want to spend. Part of that is sort of ingrained into us being the consumers, but also because our money's losing value so fast. And once we get Bitcoin, we realize that, oh, my money can actually buy me more goods and services in the future. And so if it can buy me more goods and services in the future, then maybe I should wait. You see, on a fiat system, my money is going to buy me less. So I should probably spend it as quick as I can, because if I wait, it's going to cost me more money in the future. But with Bitcoin, it's the opposite, where it's like, oh, it'll be cheaper for me in the future. Maybe I could just wait. You talked about the hurdle rate. So the hurdle rate is that if Bitcoin is going up at 50 or 60% per year, then why would I buy anything else that's going to cost me that? So what happens is it changes the cost of capital. So then it's like, do I really need that vacation? Do I really need that new house? Should I get that new car? Because I could just hold it in Bitcoin. And that Bitcoin, whatever, it's 115,000 a day. I think it'll be $1 million in 5 years from now. That's a 10x. If I just wait 5 years, it'll be $1 million. Every Bitcoin I saved or spend today or don't buy today will be $1 million. It'll be $15 million in 15 years. Am I willing to spend that 100,000 a day? That could be 15 million in 15 years. Now, if it's the beach house for my kids, hell yeah, I am. I'll trade all that money in the world for that experience with my kids. Yes, I will. But if it's that vacation,
because you have a lot of money already.
Because I've gotten there.
Of course.
Yeah. But what happens is we start to look at things through that lens, and it's like, do I really need that? And so what happens is, again, we don't want the money. We want the things that buys us, but it helps us make better decisions. Right? And that's why it changes our life. It starts to show us, it changes our value system. It shows us what's important or not. And it'll also change the world, because in the world, we have so much misallocation of capital, so much malinvestment. We're investing into all types of things that are never going to work. We're spending money on things that we probably shouldn't be working on, money chasing problems that don't need to be solved. But when you start thinking about it in terms of Bitcoin, it makes you much more selective. And I think that's a good thing. The money is losing value much faster than people think. The government reports what the CPI, or consumer price inflation, is for us. And so basically they take a basket of goods, they track that basket over time, and they tell you how fast prices are going up. But that's not what's actually happening. That's the result of what's happened, right? So it's the increase in the money supply. That's what's going on. And so rather than the CPI, in the US, it's 2 to 3%. The target's 2%. The target is to steal only 2% of your wealth per year through inflation. Jerome Powell, head of the Federal Reserve, just had their meeting, and they basically said as much, that they're going to sort of abandon that 2% target, meaning like let it run hot. But the real rate of inflation, or debasement, or the amount that you're losing in your bank account, is really the rate of the increase in the money supply. So if you think about actually the word inflation, it's like if I was going to blow up a balloon, I'm going to inflate a balloon. I'm increasing the volume of air in that balloon. So inflation is increasing the volume of money in circulation. And so what happens is when they increase the money supply, prices changing as the result of that. So we're trying to track CPI, we're looking at the result, but we want to understand that. So what is that? So over the last 5 years, globally, the M2 money supply has gone up about 8% a year. In the US, it's gone up a little bit faster. So it's somewhere in the 8 to 10% per year range is the amount that you're being debased, or you're losing that purchasing power.
Something remarkable is unfolding, not in policy meetings or trading floors, but in the quiet shift of how people think about value itself. For centuries, money has served power, politics, and convenience. Now, a new form of money is emerging that serves time. Bitcoin isn't just another speculative asset. It's a philosophy wrapped in code, built on the radical idea that saving should once again mean strength, not stagnation. As the world drowns in debt and the traditional financial system keeps demanding more spending to stay alive, Bitcoin stands in direct opposition to that logic. It invites restraint, discipline, and long-term thinking in an era obsessed with instant gratification. This psychological shift might prove more revolutionary than any price surge. When individuals begin to prefer saving to consuming, the structure of modern economies, designed around debt and perpetual growth, starts to falter. If more people start storing value in a system that can't be inflated or manipulated, the old levers of control, interest rates, money printing, fiscal stimulus, begin to lose their force. That's where the tension lies. A decentralized monetary network growing inside a centralized financial order that depends on compliance to survive. Governments may resist, regulations may tighten, and volatility may scare off the timid. But the pattern of adoption keeps expanding, feeding on each new wave of belief and participation. The real question now is whether humanity is ready for a monetary system that rewards patience over consumption, stability over excess. If Bitcoin's logic continues to spread, are we witnessing the beginning of an economic reset, or the quiet rebellion of individuals reclaiming control from the system itself? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.